We're now going to continue with our cost of goods sold budget. We can't do these until my production budget is done, because under the production budget you have direct materials, direct labor, and factory overhead. And I need the data from that in order to finish it. So remember that formula that I said we're going to talk about as far as we talked about how much I'm going to need plus how much I want left over equals everything I have minus what I already have equals what I need to buy or make. We're going to use that same concept with our inventory. So here is what I have. Here's the cost of goods sold budget. Here's my beginning inventory. This is my direct materials. Okay. So this is my actual beginning inventory in my direct materials account. Here's my beginning inventory in my WIP account and my finished goods. Here's what's going to be happening. Here's my ending desired inventory. So that's going to tell me how much inventory I'm going to have left in my direct materials inventory. This is going to be my WIP ending inventory, and this is going to be my finished goods ending inventory. So all of this will put together a cost of goods sold budget, and here it is. So it's kind of complicated, but not really. Don't be too confused, okay? So we're going to start over here. So this column, so basically I'm going to start over here. The third column is my beginning finished goods, which was given to us. Here's my beginning WIP. And over here are all my components of the WIP, the DM, the DL, the factory overhead. So this is my beginning direct materials inventory just given to us on the previous slide. Here's the number of direct materials costs that I need to buy. So add them together, and I have cost of direct materials available for use minus what's left already on my shelf will tell me the cost of all my direct materials that go into my WIP account. Think of this as the finished goods. This is the WIP. This is the components of the WIP, the DM, the DL, and factory overhead. So this right here, you're going to need to make sure you pay attention. This is the same formula I just told you how important it was before. So direct labor. So this came straight from my direct labor cost budget, and so did the factory overhead. So here's my DM, my DL, my factory overhead. Add them together, and they become my total manufacturing cost. So here's my beginning WIP plus the manufacturing cost that I bring in during the year, tells me all my work in process for the whole year. You add them together. Then you minus your ending WIP. And whatever's left in WIP is still there. Everything else has moved to finished goods. So the cost of goods manufactured, and you remember that from earlier on in the semester, is now $9,517,000. I'm sorry, $517,180. No, let's say that again, Diana. $9,517,180. So that's all the cost of the number moving from WIP to finished goods. But I already had finished goods in there. So I add those together. This is the cost of all my finished goods, and minus whatever my finished goods inventory is at the end becomes the cost of goods sold. Okay, so this is how I get to this number down here. My cost of goods sold. That's what I want to know. So remember, we did the whole thing. We started with each of these. This is my this is the components of the WIP, DM, DL, factory overhead. This is the WIP. This is the finished goods. So this is the beginning finished goods plus what came in from the WIP account, added together, minus what's still there, tells me how much actually went out the door, and then I'm actually sold that component. So take a minute to take a look at this. This is a little bit more complicated, but notice I can't do this unless I've done the DM, the DL, and factory overhead budget first. Okay, so now we're going to move to selling and admin expenses. And if you remember correctly, I said that they're usually a percent of sales, okay? Because I have to figure these out. The more I sell, the more my selling and admin budget is. So here is my selling and admin expense budget. In this case, they just gave us numbers, but in most of the homework examples, you will have, it will say a percent of this. Advertising may be a percent of overall sales. Well, where would you find that information? You would go back to the sales budget to find the sales information. So now that I've done my sales budget, my production budget, which includes my direct materials, direct labor, my factory overhead budgets, and I've done my cost of goods sold, I can now put together a budgeted income statement. Okay, so this is also called a pro forma income statement. It will show me what I plan on selling, what the cost of my goods sold are going to be, all my other expenses. So it will actually even tell me what my income is to be projected, which is a great way to know. I'd love to be able to go into the year knowing how much I'm going to have left over by the end of the year. Okay, so here is an example of it here. So again, you have to have the other budgets done first in order to do that. So I have a sale. So I'm going to start. This is my income statement. All my revenue. Here's my revenue, which comes from my sales budget. My cost of goods sold, which comes from my cost of goods sold budget. Here's my gross profit. Then I bring in my selling and admin expenses from my budget. And this tells me I'm going to make $2,403,220 income from operation. I'm taking my gross profit minusing my selling and admin. Okay, so that's income from operations before others. Other revenue that I might make for whatever reason, other interest expense, I'm going to add these together. Well, actually what they did was they netted them out, and they're going to subtract. Actually, I'm sorry about that. Revenue was more than expenses. So really, I'm making another $8,000. I'm going to add that to that number. And here's my income before taxes. Okay, this is really called earnings before interest and taxes. Or earnings before taxes, I should say, EBT. You'll see that EBIT and EBT. Now, we don't talk about it in this book, but in other, if you go higher in financial accounting, you will see those terms. EBIT, earnings before income and taxes, which would be this right here, and earnings before taxes, which would be this right here, EBT. So my taxes, and here's my net income. So I already know for this year that I'm going to make $1,811,220. That's great. Now, again, we're making the assumption that we're going to sell and everything's going to happen according to budget, but we know that doesn't always happen. So this concludes this portion. The next thing we're going to look at are financial budgets and cash budgets, which make up cash budgets and capital expenditures.